Welcome to the Payments Association Insights webinar, The Wallet Without Borders, What to Expect in 2025. My name is Anton Kornilov. I'm an independent payments industry expert with extensive experience in consumer, business, domestic, and cross-border payments. Most recently, I was with MasterCard, where in the last 10 years, I focused on cross-border payments, both card and non-card based. Our fantastic panelists will help us uncover the key drivers reshaping the world of cross-border payments and digital wallets in 2025. So please welcome them. First, Claire Gates, the Global Head of Payments and Solutions at the Crown Agents Bank. Claire, if you can come on camera, please. Dan Wilson, Head of Payment Strategy, Industry and Roadmap at Nationwide Building Society. Hi, Dan. And Ram Sundaram, co-founder and chief operating officer at TerraPay. Why did we choose this topic? The very impressive statistics speak for themselves. By next year, the number of global digital wallet users is expected to reach 5.2 billion, or over 60% of the global population, according to Juniper Research. According to Statista, some highly populous countries have digital wallet penetration rates of over 80%. For example, India, Indonesia, Thailand, Argentina, China, Saudi Arabia. But many of these wallets are being primarily used domestically. The cross-border numbers are no less impressive. FXC intelligence data shows that the non-wholesale cross-border payments had a target addressable market of $40 trillion in 2024. The share of bank processed cross-border payments is estimated to drop from 80% in 2022 to 70% next year, with fintechs taking up the remaining 30%, and this number is forecast to increase according to flagship advisory partners. The complex world of cross-border payments is becoming even more complex, with new entrants, solutions, and partnerships. Today, our experts will try to put these two large and complex issues together. But before we get started with the questions to our panelists, I have a few quick bits of housekeeping. Captions are available for this session. If they are not showing for you, there is a toggle on the control bar at the bottom of your screen. You can submit questions to today's speakers by typing your questions into the Q&A tab on the control panel. You can send your questions at any time, and you can ask questions anonymously if you don't want your name to be visible. If you have any technical issues, feel free to send a message through the chat box to Christina Gaetans from the Payments Association. The webinar is recorded, and you will be able to access it on demand within the next 48 hours. Look out for an email from the Payments Association on how to do it. So let's start with our panelists. Ram, with the advancements of technology and recent developments in electronic payments, could you please help us define what a digital wallet of year 2025 is? But firstly, could you please give us a bit of a background about yourself, TerraPay, and why you're interested in this topic? Over to you.
Thanks, Anton. So we started TerraPay about 10 years ago, and we started TerraPay with the idea of building something like Swift for mobile wallet platforms. And where that came from was we had worked in the telecom industry earlier, and we had built mobile wallet core banking systems, the systems that actually run the mobile wallet services. And that was a company founded by Amber, who's a CEO. And that company had a global market share of 40% when we started TerraPay. But each one of these wallet platforms was a silo, was a closed loop system. You had customers and you had merchants on the platform, but they could only send to each other. And a lot of this was in emerging markets, obviously, especially in Africa. And we realized that when we were interacting with customers in Africa, we realized that people often had 2, 3 SIM cards just because they needed to be able to send money to each other. And there was no interoperability. And this we thought was an opportunity. It started there. We thought it was a messaging service like Swift, but very soon we realized that banks have the capability to do everything else around the messaging when it's a cross-border payment. Right? The regulatory, they have regulatory coverage, the licenses, the compliance teams, all that. Mobile wallets are usually extremely domestically focused, and they tend to optimize that. They tend to optimize the merchant network, their customer reach, and that is their focus. They're not really looking at everything else in the cross-border space. So we realized we had to become full service providers. We started getting our licenses, and then we also had to build a platform from scratch because we realized that cross-border payments is about compliance. The technology and other good, interesting stuff is there, but that's a small piece of this puzzle, right? And when it comes to mobile wallets, there are different regimes in different countries, but we needed a platform to be able to normalize this so that senders could have the confidence that sending institutions could have the confidence that there was a standard compliance process being applied across the payment end to end. And that's the origin story of TerraPay. So we started this in 2015. We went live with the first set of licenses and partners in 2017. First commercial transactions were in 2017. And then we've been growing from there. Today, we are in 151 countries. Along the way, we realized that if you're doing payments to digital wallets, we could add bank accounts as well because our customers wanted digital payments, not specifically wallet payments. So we did that. So that's our reach today. We reach 151 countries, bank accounts and wallets. And that is where the genesis of TerraPay was.
And then if you could just cover, 2020, year 2025, the world is different now than they were, 10 years ago when you started. Are the issues different?
Yes, so that's an interesting question. So here, what a digital wallet means to you depends on which part of the world you're in. I'm in Nairobi right now, the home of M-Pesa, Safaricom. And here, a digital wallet is a stored value instrument. It is accessed with USSD, which people in the UK probably haven't seen at all, unless they're dialing to find out their prepaid balance on their cell phone provider. Right? You dial a star, a hash, and a few numbers. The entire payments interface here for the mobile wallet is done through those strings. Right? So it is not the most user-friendly mechanism there is, but that's what works. And these wallets have, in mobile wallets in Kenya, are more than 110% in penetration. People have more than one wallet. And that is digital wallets in emerging markets. Well, then if you go to Western markets, if you're in the UK, a digital wallet is an app that has the store of value in a bank account or a credit card or a debit card attached to it. That is a tool that brings convenience to the customer because bank accounts aren't easy to use in many use cases. So are cards. And then you get a whole bunch of services around those instruments that make the user experience better. So these are the two really different kinds of digital wallets that we see globally. But they're all digital wallets.
I think the world is very complex, and there's so many of them and have different shapes and guises. Claire, if I can turn to you, if you could introduce yourself, Crown Agents Bank, you're interested in the topic, but the question I have for you is, what have you seen in the last 2 years in relation to cross-border? What changes, advancements, challenges? Has the world changed, or is it about the same?
Good afternoon, everyone. As I said, I'm Claire Gates. I'm the Global Head of Payments. Been in payments for over 20 years, and actually, I started my career in the likes of Amex and Citi and at MasterCard, and then spent a large number of the last 10 plus years in the fintech space. And I've seen the evolution of things like the e-commerce from the early days to the growth of local payment methods to buy now, pay later, and of course, digital wallets. And for those not necessarily familiar with Crown Agents Bank, we're an FCA-regulated bank with a deep history of moving money across very challenging, emerging frontier markets. Could be wholesale FX, it could be payments, trade finance, or deposits. So to go back to the question, what advancements and challenges I've observed, you said of some of the stats as well. So let me just think about the opportunity. We know that cross-border global payment market was valued at 194 trillion in 2024. And that's projected to reach about 320 trillion by 2032. So really exciting opportunity out there. And B2B remains the primary driver of cross-border revenue, 69% of the total, just because of the sheer size of it. But the consumer category really carries higher margins. Hence, we've seen a lot of advancements in service capabilities, availability, and innovation. But the challenge is whether it's a consumer or a business side, cross-border payments, they overlap considerably. And I think the first one I would say is digital transformation. It's one of those topics that come up constantly, but it really is clear. It's companies being able to either update their existing infrastructure or build flexible tech stacks, so that very agile, that they can develop products or keep up with demands coming from the consumer, whatever that customer may look like, and also having the sufficient capex to be able to constantly adapt and innovate, whether it's with regulatory framework or whether it's a consumer need. Things that we've seen over the last couple of years, the digital assets, and I'm sure we're going to talk about them in more details later, APIs, ISO 2022, these are very challenging for many traditional players that maybe have legacy systems that could have been grown through acquisition and not necessarily talking to each other. And then there's also that reluctance of how close to the metal you want to develop things, because you're not necessarily sure what's going on behind the scenes. So we've had a lot of growth in the orchestration wrappers and the orchestration play. And then if they're fintechs, it's about them being able to scale and having enough runway, being able to keep up with the growth demands, etc. That's one side of it. Second one would be the complex risk and regulatory framework that's constantly evolving. And that in itself puts a lot of pressure on organizations and new organizations, whether they're fintechs operating in a relatively light regulatory framework, they still have to be aware of everything that's going on, where the consumer sits and where the payouts are. I would say then operational readiness, especially for the consumer cross-border payment space, where getting real-time instant payment 24/7, 365, that puts a lot of pressure on organizations being operational readiness. There's also something like the demands that we've seen here from a consumer perspective. We start to have that expectation when we come to B2B transactions, and yet many B2B transactions or many of the instant rail network don't necessarily lend themselves for a B2B transaction flow. And then finally, it has to be, and these are not particularly in order, but the growing expectations, and then measuring that with commercial viability.
Thank you. Thank you very much, Claire. And actually, you're absolutely right. I think if you add the wholesale cross-border market to the to kind of retail cross-border, it's just figures become staggering. 4 times the size. Dan, can we turn to you? And again, a quick introduction of yourself and Nationwide. And the question I have to you, because we're trying to put all this together, so wallets, cross-border, and evolving customer expectations. So what are your customers demanding in the context of this digital cross-border payments now compared to probably a couple of years ago? Thank you.
Yeah. Great. So thank you very much for having me. So I'm Dan Wilson. I head up payment strategy, industry, and roadmap at Nationwide Building Society. So we're a UK-based building society. We've got over 17 million customers, and predominantly on the retail side. So looking at products like current accounts, savings, mortgages, credit cards, and so on. So really coming at this from the kind of high street consumer perspective. So I agree with everything that's been said so far. I think if I come at it from what is it consumers want when we think about international payments and some of the innovation there, I think it comes down to 3 main things. So I think speed, pricing, and ultimately transparency. So as things have progressed so much over the last few years, I think people have just got used to the instantness of things. So certainly in domestic rails, you kind of got used to that payments being near on instant. But actually, I think even beyond payments and financial services, people just expect things to happen. and you can look at like a WhatsApp message or whatever, and if it doesn't send within like a split second, you start getting frustrated or think something's broken, right? So people have got this constant expectation that things should happen quickly, and they want to see it done. I think the other thing we've seen is how you can build really slick user interfaces. So I think consumers are, they want simplicity. They want to be able to do things quickly. Financial services need to fit in with people's lives and be as simple as possible. Those of us that work within the financial services industry, we've got that responsibility to make this stuff as kind of simple and accessible as possible. And I think the world sort of changes quite a lot. People are, visiting different countries far more now, and you might have people splitting their time between countries. So that need to be sending money to different regions is really quite prevalent as well. So I think from a customer point of view, those things remain true, and I think it's really interesting to see how digital wallets and some of the kind of global kind of transactions within those will start to help solve some of those consumer outcomes that we're trying to get to.
Mm-hmm. Thank you, Dan. I'm just curious if Claire or Aram, you have clearly Dan has a very focused view on his customers in the UK and nationwide. What have Ram, you're operating across all the development markets, Claire as well. So are you seeing differences in what the consumers, and maybe not only consumers, maybe businesses are demanding from the payments?
Absolutely, I agree with Daniel. It's consumers don't differentiate between between the user experience for a domestic payment and then cross-border payment. For them, a payment is a payment, and as they get used to real-time domestic payments, they expect the same thing from a cross-border payment, right? And there is no reason logically why we can't deliver that. The challenge comes in ensuring that all those various parts that need to work together seamlessly to make those real-time cross-border payments happen with the same level of quality that you'd expect for a domestic payment. We need to make sure that all of those parts work together, and compliance becomes a big issue. Transaction monitoring, screening, your systems. For one thing, I'm sure this is common for all of us. We evaluate compliance providers, technology providers quite regularly, and the surprising thing is that we expect real-time screening to happen and real-time transaction monitoring to happen, and many of them will come back and say that you can do 10 transactions per second or 20 transactions per second. We actually need maybe 200 transactions a second, right? And so those are the kind of challenges that you have in trying to meet those expectations. But customers see the payments as being the same thing. And if you can send a WhatsApp message anywhere in the world, if you can send an SMS anywhere in the world, why can't you send a payment? And that's what we need to deliver.
Thank you. And Claire, your take on this?
I think the biggest one for the cross-border web consumer business is the transparency of where it is. So, it's quite simple when it's a domestic play to have that within your, if the infrastructure is around there, to have it in your account, accessible for you to be able to spend it within a couple of hours. Yes, it would be ideal for customers to be able to do that when it's cross-border. I'm not sure there is that immediate level of requirement to have it immediately open for spending. I think what is important is the transparency of knowing where it is in the chain. It's gone from my account, but has it gone to Anton's account, or when is it going to hit their account? When am I going to be, or when can Anton then use it? And I think if you go back a few years, it was so opaque where that money was sitting, that is where people are getting frustrated. And with the advancements of technology and information, we should be able to solve that within the next couple of years.
We have solved it. I can demonstrate it to you, but we do actually do that. So we allow transactions to be tracked in real time. For the partnership that we had with Swift, we actually integrated the status of wallet payments back into GPI so that banks can track it on GPI as they do the banking payments. They know exactly where it is at any point in time. Not only that, we also there are these little things that you find out with experience when you're processing these billions of transactions, right? If we have maybe 3 financial institutions in the chain at a minimum, we have the sending originating institution, we have TerraPay, and then we have the terminating institution. Now, each one of these institutions' platforms issues an identifier, right? But for the customer, they don't care. They want one identifier, right? And what is the most useful identifier to give to the customer? For what we have realized, it is the receiving institution's identifier, because if there is a problem with the transaction, that's what they need to produce to the receiving institution to claim that money, to track that money, right? So we started returning that in the API. So these are evolving, but we realize this with scale, and as we go to more markets, we see the complexities there.
So with the with the evolution that you've seen so far, from what role would you think digital wallets will play in the cross-border payments in the future? Think about next couple of years, maybe next 5 years. Where do you see it's going? What do you see happening in the industry?
I see this as a very transformative time, the next year or two, where wallets go from being niche instruments that you give to kids or specific use cases to becoming a mainstream financial instrument that's used extensively in cross-border payments. One of the things we are rolling out with our wallet partners is the Interoperability Council, essentially the Interoperability Network, which effectively lets all our wallet users use their wallets wherever they go across our network, right? And where do they use it? It's at merchants. So today, what are the options for travelers when you go out of your home country? You have to either have a card or you have to carry cash, right? Cards are not really accessible to a lot of people even today, especially in emerging markets. Everybody has wallets. Why can't they use wallets? And this is what we've been rolling out and with our wallet partners, and they're very excited about it. I think this is the big trend that we foresee. And if global merchant payments with wallets becomes reality, then that effectively becomes a very powerful tool. So
interoperability, merchant payments. Anything
Yes.
on the regulatory side, Bram, that you see that is happening that may help or hinder this progress?
It's whatever I'm seeing actually helps. What I'm seeing is that regulators are now realize wallets are big, wallets are important. Regulators in developing countries realized that quite a while ago, and they've been working to ensure that wallets are treated on par with other instruments, not just in terms of the abilities that or the services that you can offer through wallets, but the standards that they are held to in terms of compliance, in terms of governance, in terms of safeguarding, all of those. I see regulators in, we had a great conversation with the European regulators recently where they were asking us how wallets function in Europe, how are they in Africa and in Asia, how are they regulated, how is compliance managed, because that's obviously their key interest. So I see regulators waking up to this.
I wonder if I could just add a little thing. I think, you talked about adoption of wallets. I mean, in certain regions, we know, you spoke about the stats earlier, they're heavily adopted. They're the primary point of people transacting and paying for things, etc. And on more than just a financial wallet, they're an all-encompassing wallet. So we know in Asia, they are, the primary point, and a lot in certain markets across LATAM. I also agree there's going to be a massive adoption. And I think that's also not just because of the functionality and the flexibility of them. They're also talking about a demographic as well, who haven't historically grown up with a credit card, don't necessarily, because it came through post-COVID, don't necessarily need or want cash, and have this flexibility of their mobile that holds all the value that they could use, and those great and the wallets cannot just hold multiple different currencies, but also crypto or stable coins, and so they're multifunctional.
And then maybe Dan, to you, just again probably on a similar point. Nationwide custom, right? The UK probably those stored value wallets are less are less popular than in many other countries, as Ram was saying. Do you see the wallets playing bigger role in the cross-border payments for your customers?
Yeah, I do. Yeah, and certainly across the UK. So just picking up on a few of the themes in there, we had I think it was the FCA and the PSR consulted back end of last year on the use of wallets and kind of digital wallets. So the regulators in the UK are certainly starting to explore what this could mean, and trying to set the right framework for that. If you think about some of the traditional challenges in the UK around or globally around cross-border payments that we've kind of touched on already, around some of the sort of global sanctions, differing AML standards around the world, the natural currency and settlement risk with your kind of traditional payment, cross-border payment. So there's definitely the technologies are there to start moving away from some of these traditional challenges. I really like the point Claire made about how wallets kind of become able to hold more than one facet of information. So, where I'd love to get to is where you could hold a wallet that's got, you may have a linked bank card. You may be able to link it to, QR code and make an open banking transaction as an example, or holding, store of value, something like a stable coin or something else. And I think as payment, different type of payment methods evolve over the next few years, it's really important how you make that as simple as possible for the consumer. And I think wallets are a great way to do that. I think some of the challenges in the UK, we haven't seen that adoption, but I think the UK starts from a very different place to some of the others in the world. So typically we're very kind of reliant on the card schemes as a means of payment and so on. And I think to really turn the dial on getting that usage and uptick, I think it's there is a bit of a journey to go on that. But I do think once you start kind of demonstrating the value, and you can kind of add multiple functions and bring it all together, I think we'll see more and more popularity with those type of wallets and products. You look at how Apple and Google Pay, as an example, have taken up in the last few years as kind of that convenience lens. I think that will keep going, and you kind of bring more, more capability and features into that, and give people more options of what they can do. I think that'll only be a good thing.
Thank you, Dan. And actually, we have a question in the Q&A section for you, which I think you partially answered, but I want to just make sure that we talk about it. So, so the question is: so what are the secret ingredients to get your customers using your cross-border wallet or solution versus stepping away to make these payments via players like Revolut or Wise, etc.?
Yeah, I think it comes back to those points I made at the start around speed, pricing, and transparency. I think transparency is everything for me. If I'm going in to make a payment, I think it's Claire that said it doesn't necessarily need to be an instant payment, but you want to know exactly where it is and be clear when that's going to arrive. So I think it comes down to that user experience, having the right kind of pricing in place, but also integrating it into kind of your broader product offering. So it's, I think if you can square those few things, it becomes far more attractive.
Okay, thank you. And maybe while we're still staying on the audience Q&As, so the question for both Claire and Ram around some of the challenges with digital identity across borders, and how you're looking at it, given the rise of AI and deep fakes and all the new fraud innovations that we're seeing in the industry, unfortunately. So how are you thinking about it? How are you addressing it?
A key point here is that we are not a customer-facing business. We are, our customers are financial institutions. They are the banks, the mobile wallet providers, the money service businesses, right? So a lot of this new kind of challenges in fraud is something that they are the ones facing when they onboard the customers. Right? What we see, though, is transactions between multiple financial institutions, right? My co-founder and chief compliance officer, he likes to give this analogy that we are on top of a hill surrounded by valleys, and our financial institution customers or partners are in those valleys, right? So we get to see everybody's transactions, and that gives us the ability to analyze patterns and so on. An additional advantage that we have is that we are licensed in over 31 jurisdictions now, and we keep adding licenses. And a lot of those licenses come with the ability to connect to national ID systems to verify data across national ID databases and providers and so on. So we are able to, again, check data in the middle of a transaction to see if there's anything suspicious about that.
Thank you. And Claire, maybe?
Very similar to what Ram has said. CAB is not in the is business to business, so not in the end consumer. That said, because we're in the flow of funds, we still have to screen all the transactions. We monitor them with various different tools, and whereas AI is our friend and our foe at times, because obviously a lot of the fraudsters are using that as a way to come up with more creative ways, etc. That also help us. The AI, you're putting through lots of data that you could then screen, monitor, track, and check out for patterns that could identify fraudulent activities, etc. But it will be an area that many companies globally will be continuing to invest in order to be able to ensure that they're still complying and optimizing how they screen and monitor transactions.
Fantastic, thank you, Claire. And by the way, while I have you here, I have a question for you. So there are many new competing initiatives being launched to address the well-known challenges in the cross-border payments, such as we've talked about them: cost, speed, access, fraud. There are lots of new players entering the space traditionally controlled by the banks. So how do you see the future competitive landscape evolving? Will there be a big wave of consolidation of initiatives and providers, or will we see a highly fragmented competitive environment supported by various partnerships?
Gosh, it's quite political. I'm going to ask, I think, a bit of both, a bit of everything. And I think there's two sides of that. On the consumer space, I think we'll find, given the maturity of cross-border payments for consumer space, I think we might see a degree of consolidation. I also think that, the last couple of years, we've all heard about it. There's a lot of dry powder sitting around because the investment from PE, VCs globally has been a little bit light. So I think we might see that level of consolidation going on. But then when something consolidates, another one would pop up. So you're always going to see some innovation going around. I actually definitely think in the B2B space, when I look back at B2C or C2C was like previously, B2B reminds me of a space it used to look like about 10 to 15 years ago, and it's really lagged. And I think what we'll see now is a lot of innovation and startups and fintechs are coming in and trying to create opportunities and advance and push B2B payment space, cross-border payment space.
Okay. Ram, maybe a similar question to you in terms of competition or partnership, co-opetition. How do you see this world evolving?
So we are in the B2B space between financial institutions. So we really, it sounds a bit glib when I say this, but we don't really compete with specific companies in that kind of manner that customer acquiring companies often do, right? We work with each one. Any company in this space, we work with all of them. There are areas where they have a better network, we use them. There are areas where we have a better network, they use us. We all work together in this. It's all happy families. That's we have partners right here. We work with Crown Agents Bank. They provide banking services to us. So we work with everybody.
Okay, thank you. Maybe Dan, quick question. Oh, so sorry, Claire, do you have a?
Yes, I want to add something actually from my side. I think it's actually very important for collaboration and for fintechs to operate, to traditional players to operate as well, because You know, we all are working in constraints that we operate within our, organizations, whether it be a regulatory framework, whether it would be a compliance, whether it be a CapEx framework or technology tech stacks. And I think when you can work and collaborate together, that's when ultimately the end customer benefits, because a fintech may potentially push boundaries, be able to do things quicker, can work in a more flexible framework. And as long as there's partnerships operating together, there's also benefits for the industry as a whole.
Thank you. Dan, your view on competition, collaboration, competition in this space?
Yeah, I think a couple of interesting points in that. I think for me, what I love seeing is where you've got these innovators, startups, whatever you want to call them, trying to solve a genuine customer need. So coming at it from a genuine consumer outcome that they're trying to solve, rather than just using technology for the sake of technology. So I think where you start from the point of having a genuine pain point that you want to resolve, I think you get much better results and outcomes. I think more broadly, there's a responsibility, on all of us. But I think around how do we educate people? So certainly in the UK, how do we make sure you've got the right conversations going between the regulators, even what is it the consumers are really after, and how do you start making sure policymakers are kind of involved in those conversations as well? It's challenging. It's a challenging environment, and if you look at some of the kind of payments industry reports and reviews that have taken place over the last couple of years, the sheer volume of regulatory change and some of that demand is kind of well documented. So I think there's a piece to make sure that kind of got the right regulatory support to allow people to innovate and to kind of try and solve these problems, but also investing in the new technologies that we need to do that we've already discussed exist to solve those problems. So I think a big part is how you bring that together. And then I think for the UK specifically, it's that education piece. So, we talked about the lack of awareness and potentially some of the consumer confidence in wallets, some of the security concerns as well that we've touched on, and also generally, acceptance. So if you look at some of the barriers of why these aren't taking off, those are the top three things that have come out. So I do think there's a collaboration piece to try and bring all that together and really start trying to bring more of a more awareness to the right people, so we can really start making this happen.
Fantastic, thank you. Sounds like we're all in agreement here. So let me switch gears a little bit, because we've talked a lot about consumers and potentially consumer-to-consumer payments, remittances. Can we just talk a little bit about either consumer to business, and I think Ram, you touched on that, or business to business payments? So digital wallets in the cross-border context, do you think connected digital wallets would be a good tool for businesses to pay each other and consumers to pay businesses? So, and how long do you think it will take? I think it's not just only for Ram, but I would like for Ram to start this kind of thinking, and then maybe go to Claire and then Dan as well. So,
I mean, this is probably one of the faster growing segments that we see today: business payouts to wallets, business collections from wallets. So consumer to business, business to consumer, and business to business. The one thing to keep in mind is that the wallets are usually constrained by limits, as in headroom in how much money can there be in a wallet at a given point in time, right? And we see, therefore, that restricts the use of the wallets to SMEs largely as businesses. So we see that a lot in emerging markets where SMEs have wallets and they use that for like a bank account. So that's where the to business payments come from. Another area of to business payments is essentially those SMEs originating payments to larger businesses, bank accounts, and so on. So it originates from a wallet but goes to a bank account, those kind of transactions. But bulk payments, which is large businesses sending money to a lot of consumers, especially in wallets, that is something that's really massive. And this is a lot. I mean, this is something very common in the digital media business, especially influencer payouts, social media payouts, those kind of things. And because those payments are actually low value payments, they're $2 or $3, maybe $5. It's not really very efficient today to do a $5 transaction cross-border through traditional channels, right? Wallets are ideal for that. So we see a lot of that also happen.
Thank you.
I think you've articulated it really well, Ram. I think there was no doubt that B2B transactions, if there was not this constraint of size of average transaction size to be able to transfer between wallet and wallet, it would be a great alternative for more traditional rails for B2B payments. And I can see, when you spoke about why you first started, the business was to be an alternative to SWIFT, that would certainly help, I think, many B2B transactions and businesses to be more transparent, more timely, etc.
Okay.
Great. Dan, any thoughts from you on
Yeah,
this?
two things. So one, I think the main thing for me comes down to choice, right? So I absolutely see a world where you've got interconnected wallets, and if you've got someone in the UK who wants to purchase something from a merchant abroad, and they can do it through a wallet or through that means of choice, then that's a good thing. We see global marketplaces. Again, the world's a very different place to what it was a couple of years ago. You can buy stuff from pretty much anywhere in the world. So you should be able to choose how you pay for that in the most efficient way. It would be remiss of me not to talk about customer protections, and I don't think that's come up yet. So I would probably caveat with, some of my enthusiasm for that with how do we make sure we're balancing the right protections for customers. So if we think about the UK, some of those protection methods, be it on credit card and debit card, they're well known, well understood. And as we have new payment types coming online, so we talk about open banking quite a lot, and if we start moving into sort of cross-border, I think it's that awareness around what protections do and don't exist, and just making sure people are kind of aware of some of the potential risks of using different payment types with knowing where they are and aren't protected. So I think, yes, I see that world, but we've got a responsibility to make sure that we're protecting consumers appropriately, or at least making sure they're aware of what they are and aren't covered for.
Okay, thank you, Dan. We have a question in the Q&A section. So how do you see the role of stablecoins and as a settlement mechanism as far as cross-border payments are concerned? I think that's a great question. I think I probably see on LinkedIn and in the industry press the conversation about stablecoins constantly. So I think whoever would like to start, Claire, Ram, Dan, I think it's a question across the whole value chain. I think that we need to think about, right?
I think it's a matter of when, not if.
Okay. Very short answer.
I agree. And I would like to point out that LinkedIn is alternate reality. So don't believe everything that you see there. We are constantly exploring stablecoins for settlements. Obviously, anything that makes settlements, the treasury movements faster is something that we would be happy to look at. I don't think we are quite there yet. We have a lot of conversations happening with stablecoin providers, stablecoin settlement providers, essentially. But it always comes down to liquidity, the amount of liquidity they can provide us, and where they can provide us that liquidity. If it is one bank in a country and I have to then go back and move that money across the local clearing system in that bank to my bank, it's not really saving me much time or effort in that process. So, and again, the amount of liquidity that stablecoin providers can provide us in our corridors is nowhere near what we need to actually use stablecoins as an important source of settlement. We are looking at it constantly, though. I think it'll get there at some point.
Yeah, I was on a panel at the Pay 360 event a couple of weeks ago, and this took up probably 90% of the conversation. I think some really interesting practical applications of stablecoin, and one of my panel colleagues was representing from South America and was talking about some of the uses of stablecoins to hedge against some of the currency fluctuations. Again, I don't think if we think about the UK, I don't think we've got some of the similar constraints as we see in other parts of the world. But again, we're seeing interest now from the regulators, and we're waiting to see what that regulatory framework is going to look like, and how that may or may not influence how the UK approaches the use of stablecoins. But I'll go back to Claire's point. I think it's when that's going to happen, and not if.
Thank you. Ram, when approaching banks, how do you typically address their reluctance to engage in the remittances business, considering that they will likely have to manage high volume of small transactions, and a lot of that will need to be processed in real time with market standards? So how do you deal with that when you are talking to your customers?
First of all, I wouldn't characterize it as a reluctance to enter the remittance business. I see in my conversations with banks, I see them very keen to enter the remittance business, but there are those problems mentioned that they need to solve for. And partners like TerraPay are, sorry for the pitch here, but we are the ideal partners to help solve for those things, right? But more importantly, it's on the bank to decide where they want to be, right? I think it's a reality for most banks in the UK and Europe that your retail customers will transfer money from your bank to the likes of Wise and Revolut, and then use Wise and Revolut for all their cross-border or retail payments and so on, right? What happens there is not only are you losing out on transaction fees, but you are actually helping set up competitors for yourself, and you are losing mind share in terms of services that you provide. So you become a wholesale provider rather than a retail provider. Is that where you want to be as a bank? Ultimately, if you're in the retail business, don't you want to have all the retail? Don't you want to be a part of everything that your retail customers do? So I think that's the decision that the bank has to take. And it's not a simple decision. I know it's complex, but partnerships work. FinTech partnerships work very well for this to help address many of those issues as well.
Claire, are you in your experience where you?
I've just said, I actually think I've seen a wave of interest for banks to be able to offer competing propositions, leveraging third parties like TerraPay, to be able to offer solutions to be able to retain or pull back in some of the services that maybe remittance companies have been offering.
And Dan, would you agree? Because I think you are the. Are you reluctant to engage in this as a bank, or?
No, I think I agree with with a lot of what's been said. I think comes back to what I said earlier. You've got to have engaging products at the right price and the right usability. And if you don't offer that, then people will go elsewhere. And there's a lot of people in the market that are demonstrating they can service that part of the payment journey very well. So it's how you make sure you're balancing the needs of all of those customer points, regardless whether it's a domestic or a cross-border payment. So no, I agree, and we see a lot of these firms.
Okay, perfect. Well, we have actually another question from the audience that I would like to for the panel to consider. So as more domestic and international payments go across instant real-time rails, are banks and PSPs ready for confirmation and verification of pay mandates? Maybe Claire to start with, and Ram. Ram, go ahead, please.
Oh, I thought Claire was
go ahead, please.
Okay. Yeah. So yes, well, we are ready for it. We are actually an RVM in the VOP process. So we will be part of the rails for verification of pay. We are ready with confirmation of pay as well, and we see a lot of interest from all banks and non-banks that we speak to on consuming these services, we actually realized that when we started off Terrapay, we didn't think of this as a value-added or separate service. We thought it was just essential hygiene. So we went ahead and in our network, wherever it was possible to build confirmation or verification of pay, we went and built that. And today we have this live in 31 countries and for bank accounts and 45 countries for mobile wallets. So it's something that's sort of core to us. It's not something that we think of as good to have now.
Excellent, excellent. Okay, well, I mean, I think it's been a fantastic discussion. I really appreciate the all the insights. Maybe just as we're coming to the end of the conversation, I would like to ask all three panelists, and maybe starting with Dan this time, to again, considering what we've discussed, considering the topic of wallet without borders, what to expect in 2025. So what are the couple of things, maybe 2-3 things to watch out for in the next 2 years in this space that will either make things faster or maybe slow things down?
Yeah, so I think I'd call out two things. One, I think it's the growth of the capabilities within the wallet. So we talk about different types of products that you can hold, or the type of transaction capability. And I think that paired with some of the global interoperability to allow you to make some of those cross-border transactions and payouts will be, I think that will become more commonplace over the next couple of years.
Okay, thank you. Claire?
I suppose it'll be two things from my side, I think, from what we've spoken about, both actually. AI and how that can be leveraged to optimize operational performance, including risk, the fraud, the transaction monitoring, and then secondly, especially in the emerging markets, the use of stable coins for both consumers and businesses alike to actively and swiftly make payments in and out of those challenging markets where liquidity is often a problem or where there is significant currency fluctuations or volatility.
Great. Ram? A couple of things.
So I'll take the what could hinder stuff first and then move on to what will help, right? I think what will hinder cross-border payments, cross-border is intensely linked to macro stuff, to geopolitics and all of that. And if things go on as they are now with uncertainty and all that, that could essentially reduce the risk-taking that institutions, financial institutions do or can take risks on in terms of launching these services, these capabilities, if you're not sure this is something that is sustainable, right? That I think is a big risk that we have. And in terms of things that will help us, I'm with Daniel and Claire. We see a lot interoperability, obviously, like I said earlier at the beginning of this webinar, was we expect merchant interoperability to be a big thing. We are working a lot with AI and tools like that to see how we can improve quality of service to customers, how we can sometimes if 99.9% of transactions go through smoothly, instantly, that's not the problem is that 0.01%, right, always. And for those 0.01%, especially when it goes through a complex chain of financial institutions, analyzing what happened is something that we are really keen on using these modern technologies to the new technologies that are coming in to help so that customers get that much more transparency and clarity on where the transactions are.
Perfect. Thank you very much. Well, thank you. Huge thank you to all the speakers. I think it was really thoughtful and thought-provoking conversation. And I also would like to thank everyone who has attended the webinar and who asked the questions and stayed with us for the duration. If you have any other questions, please contact the Payments Association at the email address events@thepaymentsassociation.org. You will shortly be receiving a survey on the webinar, and we would really appreciate if you would complete it and come back to us with your feedback in order to improve it for the next time. You will also receive a follow-up email within the 48 hours of the webinar with the link to view a recording of this conversation. And on behalf of the Payments Association, Terrapay, our speakers, I would like to thank you for joining us today.
Thank you.